Hello everyone and welcome to my channel Answer with Numbers, where we identify complicated everyday problems and try to create rational solutions using numbers. This is section 2 of the rent versus buy topic. In this video, I will take you through the rent versus buy decision making tool that we have created just for you. This is an excellent tool for anyone trying to make a decision between renting versus buying. If you want to understand the fundamentals for the rent versus buy concepts, please review the section 1 with the link provided in the description. Now let's dive into the section 2 and learn this tool. Welcome friends. This is the screen you will see when you open this tool. A link to our website is provided in the description below where you can go and buy this tool. As you can see, there are 4 sheets in this tool. So the first sheet is a summary sheet. The second one is the input sheet. The third one is a results sheet, and the final one is a data sheet. Basically, we'll be using the input sheet and the results sheet. So input sheet is where we will input all the data, and results are where we'll see and evaluate the results. So let's go back to our example and see how this tool will help us calculate which option is better. So if you think about moving to New York, we identified 2 options. One is rental and the other one is for sale. So imagine I need a 2-bedroom apartment and the rental property I've identified is for $5,000 a month and the one for sale is for $1 million. So let's fill in the details for these 2 properties and figure out which one makes more sense. So the first section here you see is for the property which is on sale. The second one is for the rental property. And finally, the third one is to calculate opportunity cost. So looking into the first section here, let's start filling this out. So in this example, we have a property for $1 million. So as you can see, the property purchase value is $1 million. We also need to populate what is the assessed value for the property. Now this is something which is required to calculate property tax. You can go ahead and talk to the realtor, and if you don't have a realtor, you can also go online and try to do a search on your county website to see how they assess values. For this example, we can assume it to be $1 million for the assessed value also. Okay. Now for the state, we can use the drop down menu and select New York. There you go. The next one is the mortgage interest rate. So this is where we can assume it to be 4%. These days it's actually lower. So actually I have provided the link for a website where you can go and estimate what it needs to be, or you can call some banks and see where you currently stand and what they're currently offering. Now this will vary according to what type of loan that you're looking for, and also where you currently stand with your credit score and your overall credit history. For this example, let's go to the website that I'm referring to and then use that to see what works best for us. So the link for this website is also provided in the comment section. So you can go there, click on it, and then this is the screen you will see. As you can see, there are multiple options for the loan. For the calculation, we are comparing fixed. So basically, if you go back and look for the options, we have 30-year fixed and 15-year fixed loan. So like for this example, let's assume 30-year fixed. For 30-year fixed, and this is overall national, but we can be more specific and then see for New York. And then this will vary. So these are the rates we will currently see, which is prevailing as of July 2nd. It varies with your FICO score. So let's say we lie somewhere between 660 and 679, and according to that, we see the annual percentage rate, or APR, is 3.432%. So let's use this one for our mortgage, 3.432. Type of loan, we can leave it as 30-year fixed. Down payment. So let's say we are making 20% down payment here. And you can vary it according to how much down payment you're willing to pay. The next one is the PMI rate. Now if you go back to the basics, PMI is something that is required by the bank, only if you're making less than required down payment. So if you're making 20%, most of the times this will be 0, so we can leave it at 0 for now. The next one is a monthly maintenance fee. So this is something that is required for a condo that we're looking for. Majority of the times when you look for a property, HOA or monthly maintenance is predetermined. So for the property, you can talk to your realtor or the owner and they will give an estimate here. For this example, we can assume it to be $1,500 a month. The next one is the property tax. Now for this one, we have two options. The first one is if you don't know what the property tax is for the area of your property, you can leave it blank. And this calculator will automatically fill in the property tax, which are averages for that state, and then use that for the calculations. Now that will give you a close enough estimate. But if you do know the property taxes, you can actually figure it out from your realtor, or you can call the owner. This website, which is on money.cnn.com, they provide a very interactive map here, so you can see it's a kind of a heat map. Let's click on this one as percent of home price. So this option will actually provide you with the percentage property taxes for each and every county in US. So let's go to our New York City. So this is Bronx, come further down, this is Queens. So you can see this is New York County. And for New York County, this is 0.73%. So let's go back to our calculator and then use 0.73%. There you go. All right, let's go to income tax. So this is something that you will have to populate benchmarking from what income tax you paid last year. So this is something you can pull up from your W-2s. And let's estimate that for last year, you paid around 25% income tax. Next to the filing status. So if you're married and if you file jointly, you can use this option. Otherwise, you can just leave it as other. Next is closing cost. So closing cost is something which is predetermined when you make the transaction for the home. Usually it is around 4%. So again, you have two options. One is just use 4% if it is unknown, or you can call your realtor or talk to the owner and see if they can help you with this number. So for this example, we can just assume it to be 4%. The next one is homeowners insurance. On an average, we can assume it to be $150 a month. The next one is the average monthly maintenance cost. We can assume it to be $150 a month. So the next one is the property tax exemption. Now this is something which varies by location. Every county will have some kind of exemption that they will provide on the property tax. And if you qualify, what will happen is they will reduce your assessed value by a certain percentage. And whatever is left, they will calculate property tax on that residual value. And let's say the property tax exemption provided to you is 10%. So what will happen is the property tax will be calculated on $900,000, which is 90% of the value. All right, so now we have all the details for the property on sale. Let's review for the rental property now. So the monthly rent we are looking for is $5,000 as we discussed, and looking at the renter's insurance, we can again assume it to be $120. This is something that varies, so you can call the providers and see what it would be in your situation. And then the next one is other costs. Now this is for facilities, parking, any other costs that you would be required to pay. For this example, let's assume it to be $100. Finally, the last input. So this is where we will input any opportunity cost that we might incur if we take this down payment and invest in this home. So it is a very, very heavy investment, right? So you're thinking about a $1 million property, which means that if you're making 20% down payment, you are making a down payment of $200,000. So instead of investing this into the property, you can also invest this money into your portfolio. So for this example, let's say that our portfolio can generate around 8% annual return, and the property will gain approximately 5%. This is assuming country average, so you can just leave it at 5%. Let's go back to the result sheet and see what we have. Now we have the results here already calculated. There are again 3 segments here, right? So the first segment is basically looking into how much total down payment is actually needed, and this is the first check if you have the down payment money or not. The next check is to see if you can afford the monthly payment. So it calculates monthly payments required for owning the property and for renting the property. And finally, the last one is, does it make financial sense, right? So as we go back to the basic principles, this is comparing sunk cost for each and every options here. And then we can make a decision what makes financial sense. So let's go through each and every section here. So the first one is looking into how much total down payment is required. You would be required to pay the down payment for the property and then the closing costs. Total, you would be required to have $240,000 in your bank account to make this transaction. Now, that's the first check. If you have this money, great, we can proceed to the next steps. But if you don't have this money, then you will have to go back and tweak some of the inputs. You will have to modify how much down payment you will have to make. So things will vary accordingly. Well, let's say we have this money in our bank accounts, and we can proceed to the next step. So here we will see that if we own the house, we have to make all these payments, right? So there's mortgage, there's maintenance, property taxes. We're not paying any PMI since we're making 20% down payment here. Then there is monthly maintenance and then homeowners insurance. If we add them all up, we are paying $6,663 and 20 cents. This is the monthly payment you'll have to make if you own the property. Now, if you rent the property, you will have to make $5,220. The second check we have to make is what we can afford. If you can afford this payment, then let's go to the next segment here. So check 3 is what makes financial sense. In this case, you will see that we need to compare the sunk cost, right? So this is where the real value of this calculator comes into play. In this case, you will see that your total sunk cost is actually less if you buy, because if you rent, all the money that you're paying in rent is sunk, okay? You don't get anything back. But if you buy, you can see the difference here. You are making monthly payments here for $6,663, but not all of that money is actually gone. You get some of that money back, right? If you see that what's your total sunk cost, it's $4,228.41, and then your sunk cost from renting is $5,220. So in this example, buying makes more sense because your total sunk cost for buying is less than your total sunk cost for renting. Alright, so as you can see, very quickly with all the inputs we enter here, we can get the results. So we went through all the details here. If you have any other questions, please feel free to write us. But this is how you will use the tool. And we hope that this was helpful, and we wish you best of luck.